This law made it illegal to trade futures contracts on onions in the United States. There was a time in America when onions were traded like oil and gold, until one man cornered the market so hard, Congress banned onion futures forever. In the 50s, onions were one of the most actively traded commodities futures contracts in the United States. Farmers, traders, and speculators all used onion futures to hedge prices and make bets on supply and demand. Then came a trader, Vincent Kosuga, later nicknamed the Onion King. Kosuga realized something about the onion market. Onions are bulky, perishable, and hard to store. That made the futures market vulnerable to manipulation if someone controlled enough of the physical supply. So that's exactly what he did. Kosuga and his partners began buying massive quantities of physical onions across the country. At some point, they controlled a huge percentage of the onion supply in Chicago, which was the hub for onion trading and storage. At the same time, they started short-selling onions futures contracts. That means they were betting that onion prices will fall. After cornering the physical market, Kosuga flooded the market with onions, creating an artificial surplus. Prices collapsed, onion prices fell so low that a 50-pound bag of onions was worth less than the bag itself. Farmers were devastated, warehouses were full, prices crashed nationwide. Meanwhile, Kosuga made a fortune because his short futures position skyrocketed in value as prices dropped. This was not illegal at the time. It was market manipulation in plain sight. But commodities law had not caught up to this kind of strategy. The backlash was massive. Farmers protested, politicians got involved. The Chicago Mercantile Exchange was under fire. In 1958, Congress passed the Onions Futures Act. This law made it illegal to trade futures contracts on onions in the United States, a complete ban. To this day, onions are the only commodity in the United States that cannot be traded as a futures contract. The irony is powerful. The futures market is designed to reduce price volatility and help hedge risk. But in the case of onions, the futures market was used so effectively for manipulation that the government decided the only solution was to eliminate it completely. And that is why even today, onions futures do not exist. One trader strategy permanently changed US commodity law.